When an asset with the scale of XRP pushes its valuation back above the $130 billion mark, it's worth taking a closer look at what's happening beneath the surface. Market cap doesn't move on noise alone. It reflects a combination of demand, liquidity conditions, and investor confidence, especially when the number is large enough to compete with major global companies. For longtime XRP watchers, this rebound marks a notable moment in a market that has seen its share of volatility. In this breakdown, we're going to explore what drove XRP back to a $130 billion market cap, what this milestone does and doesn't mean, how liquidity conditions are shifting, and what indicators will matter in the weeks ahead. If you think analysis like this belongs in your feed, feel free to hit the like button. By the end, you'll have a grounded framework for understanding whether this valuation reflects short-term enthusiasm or the start of a more durable trend. What's driving XRP back to a $130 billion market cap? XRP's return to a $130 billion valuation begins with a simple mathematical reality. Even modest price appreciation can produce a large market cap jump when an asset has a high circulating supply. Because of XRP's scale, price movement doesn't need to be dramatic for total valuation to shift by billions of dollars. But price alone doesn't explain investor behavior. Recent demand across institutional and retail channels has been relatively stronger compared to earlier parts of the year. Some of this interest may be tied to broader market conditions. Periods of improved sentiment generally lift large-cap assets first. When investors rotate back into the crypto market, XRP tends to benefit early due to liquidity and recognition. There's also a technical component. Breaks above certain price levels can attract momentum traders, amplifying short-term inflows. Even if long-term fundamentals haven't changed dramatically, structural interest combined with improved sentiment can be enough to push the market cap higher. However, a market cap milestone doesn't tell the entire story. Understanding what a $130 billion market cap actually represents is the next piece of the puzzle. Why the $130 billion level matters. Crossing the $130 billion line places XRP among the most valuable digital assets globally. Investors, especially those managing diversified portfolios, tend to pay more attention to assets with significant market capitalization because size often correlates with liquidity, stability, and long-term survivability. Simply put, large-cap assets tend to attract more long-term capital than smaller ones. This valuation range also pushes XRP into a category that many institutions consider investable from a risk modeling perspective. Large market cap doesn't eliminate volatility, but it often reduces perceived fragility. Assets of this size are viewed less as speculative bets and more as sizable components of the overall digital asset landscape. A market cap this high also reinforces XRP's positioning in crypto index products and automated allocation models. Many funds allocate based on market-weighted formulas, meaning that higher valuations can naturally lead to increased passive ownership over time. But even with these advantages, market cap can only be understood properly when paired with liquidity.
How this affects liquidity and market behavior. Liquidity is where market cap starts to matter most. When an asset reaches a valuation this size, it generally becomes easier for large trades to be executed without causing dramatic price swings. That stability attracts institutional participants and encourages more sophisticated trading strategies. Higher liquidity may also draw additional market makers and improve order book depth on major exchanges. A deeper order book creates smoother price discovery, reducing the impact of sudden sell-offs or large buys. This kind of environment is where assets begin behaving more like established financial instruments and less like speculative tokens. Another important factor is investor behavior. When valuations stabilize at higher levels, long-term holders tend to feel less incentive to sell into strength. That can reduce the amount of circulating supply available for trading, supporting steadier price action. If you want more updates like this, feel free to subscribe. Still, while liquidity improves at higher valuations, it's important to recognize what market cap does not guarantee, because this is where misunderstandings often begin. What the market cap doesn't guarantee. A high market cap doesn't automatically translate to real-world adoption or increased utility. It simply measures the combined value of all circulating tokens, not how often they are used or how active the underlying ecosystem is. Without supporting metrics like transaction volume, developer activity, and enterprise partnerships, market cap alone can create a misleading sense of progress. Another limitation is liquidity concentration. Even with a high valuation, a significant amount of XRP may reside in wallets that rarely move. If only a fraction of supply actively trades, then actual liquidity can differ from what the headline number suggests. During times of high volatility, this can become more apparent. There's also the issue of risk. Crypto markets remain sensitive to macroeconomic uncertainty, regulatory changes, and shifts in investor sentiment. Large cap assets like XRP may fall less sharply than smaller ones, but they're not immune to broader market corrections. Understanding what market cap can't tell us sets the stage for examining what changed since XRP's prior market lows. What's different compared to earlier market low periods? Earlier periods of lower valuation came during moments of market stress, regulatory uncertainty, or broader risk-off sentiment. As those pressures eased, capital began flowing back into large cap assets, and XRP benefited from that shift. A recovery to $130 billion suggests investors have regained some confidence, whether due to improving sentiment or perceived stability. The broader environment has also shifted. Crypto markets have been gradually maturing with increased participation from institutions, more regulated investment vehicles, and deeper liquidity across major exchanges. These structural improvements make it easier for large cap assets like XRP to regain lost ground. For some investors, XRP's rebound is also a sign of durability. Assets that consistently recover to major valuation milestones are often interpreted as having staying power within the market. Even if the rise doesn't signal a major trend reversal, it demonstrates the asset's ability to attract capital under favorable conditions. These developments build toward the larger context, what holders and observers should monitor next.
Key indicators to watch now. The first indicator is trading volume. Rising market cap supported by strong, consistent trading volume reflects healthier demand than sharp price jumps on low volume. Steady volume shows real participation rather than temporary excitement. Another important factor is supply behavior. Large holders can influence price dynamics significantly. Watching whether they accumulate, distribute, or remain neutral offers insight into potential future volatility. Supply unlocks or sudden wallet movements can also create short-term pressure. Broader market sentiment remains a central driver. Changes in risk appetite, interest rate expectations, or global economic conditions can influence valuations across all digital assets. Even strong individual performance can slow when macro forces weaken. Finally, ecosystem development matters. Partnerships, new use cases, and network activity provide a foundation for longer-term valuation. Market cap can rise and fall quickly, but adoption tends to shape durable value. These elements all play into how XRP fits within the larger structure of the crypto market. XRP's role in the broader crypto landscape. At a $130 billion valuation, XRP sits comfortably among the upper tier of digital assets. Large cap assets often serve as anchors in the broader market, providing stability and acting as entry points for new institutional capital. XRP's liquidity and scale make it a natural candidate for this role. This positioning also increases XRP's influence within index products, passive investment vehicles, and diversified crypto portfolios. When market participants view an asset as foundational, it tends to attract more consistent inflows during favorable conditions. However, being a major asset also comes with expectations. Investors look for signals of continuing utility, technological development, or real-world application. Assets in this tier are often judged more critically because perceived maturity raises the bar for future growth. Understanding these expectations leads directly into evaluating where the market may go next. What could challenge this valuation? The first challenge is market-wide volatility. Even well-capitalized assets can experience swift declines if broader risk conditions deteriorate. A shift in interest rate policy, unexpected economic data, or geopolitical tension can all reduce appetite for risk assets. Second, supply dynamics pose an ongoing risk. Sudden large sales, whether from early holders or institutions rebalancing portfolios, could create downward pressure.
Because XRP has a large total supply, stakeholder behavior can influence momentum significantly. A third factor is utility. If actual network usage doesn't rise alongside valuation, investors may question the sustainability of the market cap. Long-term holders often look for signs that adoption and transaction activity support the valuation. Finally, liquidity conditions matter. If trading depth doesn't increase alongside market cap, price may become sensitive during periods of high activity. Sustainable valuations depend on healthy liquidity, not just headline numbers. With these considerations in mind, we can close with a grounded view of where XRP stands at this moment. Reclaiming a $130 billion market cap is a meaningful milestone for XRP. It reflects renewed interest, stronger liquidity, and a shift in sentiment toward large-cap digital assets. But while the number is impressive, it's important to remember that market cap alone doesn't guarantee stability or long-term strength. The true test will come from continued demand, real usage, and how the broader market environment evolves. Still, this moment offers a useful reference point. It shows that XRP remains capable of regaining major valuation territory when conditions improve. For investors and observers, the next steps involve watching volume, tracking supply behavior, and monitoring broader economic signals. If you'd like deeper breakdowns like this, feel free to subscribe and share your thoughts in the comments. Your perspective helps shape what we cover next.